Good afternoon, and thank you for tuning into Channel 327 Accounting World Update. We have 4 special guests with us today who are going to address a variety of different issues regarding accounting. First, we have Elaine, who is going to inform us on how the economy is affecting receivables.
Thank you, Kendall. Due to the struggling economy, companies across the U.S. are discovering that they're having difficulty collecting receivables. According to SageWorks Incorporated, it takes almost 4 days longer to collect on accounts than last year. This raises the average to 27.4 days, up from 23.7 days last year. The more customers are defaulting on payments due to the struggling economy, which leads to increases in allowance for doubtful accounts, which directly affects the bad debt expense. To prevent increases in uncollectible accounts, companies are taking action. Some of these actions include requiring credit checks for new customers, dropping clients who consistently pay late, and requiring contracts with strict payment terms and obligations. There doesn't seem to be an end in the increase in bad debt expense until the economy fully recovers. Now back to Kendall.
Thank you, Elaine. People really need to pay their bad debt. Now we have Jamie, who is going to discuss a current issue regarding revenue recognition.
Thanks, Kendall. Recently, the Apollo Group, who is head of the University of Phoenix, is being investigated by the SEC for their revenue recognition reporting methods. Finance Chief Brian Schwartz claims Apollo's revenue recognition practices are in accordance with U.S. GAAP. For-profit colleges such as the University of Phoenix have been under fire for their practices of recognizing revenue, which is largely collected through government loans. Apollo, for example, is being sued for owing the government billions because they pay recruiter incentives based on the number of enrolled students, which is prohibited by the federal education law. Apollo Group is being questioned about recognizing revenue based on attendance records and how revenue is disclosed when students withdraw from the university early. The Apollo Group reports that they stop recognizing revenue when a refund is processed. Statistics show that the Apollo Group has risen its bad debt expense from 3.2% to 4%, which has led to the Government Accountability Office cracking down on admissions to only admit qualified students with higher chances of success to ensure that lower withdrawal rates and reverse the increasing percentage of bad debt expense. Now back to you, Kendall.
Thank you so much, Jamie. If people don't recognize revenue correctly, they will eventually be caught. Now we have CJ, who is going to touch on the topic of convergence from U.S. GAAP to IFRS.
That's right, Kendall. Many are under the impression that U.S. adoption of IFRS is just around the corner in 2011, but recent events convey a different timeline. IASB is funded by corporate contributions, unlike FASB, who is funded by mandatory contributions from the Public Company Accounting Oversight Board. This means IASB is subject to more political pressure from politicians who are pressured by banks and groups such as the European Commission. Just last year, IASB succumbed to pressure from European regulators and relaxed its stance on fair value accounting. Critics call this a step backward because it doesn't improve the quality of financial reporting, and reclassifying of financial assets doesn't add anything to the asset value, it just fixes the books. Sir David Tweedy considered resigning as IASB chairman after going head-to-head with the European Commission over the use of fair value methods. He warned that further interference in accounting rules could destroy the effort to adopt a unified set of standards. If IASB continues bowing to political pressure to ease their rules, FASB's IFRS implementation may be postponed. Back to you, Kendall.
Thank you, CJ. That was extremely interesting. Hopefully the transition from U.S. GAAP to IFRS will be much smoother than we are all expecting. Now we're going to Becca, who is live in Italy, and who's going to discuss the effect of the economy on a bank in Italy.